Hi everyone, welcome back to my channel. In the last video, I said that there will be no technical analysis outlook for 3 weeks, but a lot has happened and I think it is important to update some of the names that I have covered in past videos. I am making plans for videos that are related to currencies, stocks, and finance in general, so please subscribe if you like such content. As always, before I begin, I want to clarify that this is not a solicitation or a recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you are using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be reviews of the names I covered in past videos. This week will be on Euro dollar, Sterling dollar, Aussie dollar, Kiwi dollar, Euro stocky, dollar yen, sterling yen, Swiss yen, euro yen, and euro sterling. And on stocks, it will be Richemont, Deutsche Bank, Prudential, Danaher, Rolls-Royce, Infineon Technologies, Netflix, Wells Fargo, Bristol-Myers, Freeport-McMoran, and Dell Technologies. There will be no new coverages for this week's video. In case you don't want to know about the old stories and just want to get straight into what is coming up, I have put in timestamps in the description for your convenience. I'll start off with the euro dollar, currently trading at 1.0935 on the 8th of August 2024. Now, I previously noted that euro dollar completed a bullish symmetrical triangle and the textbook target is at 1.1621. And I also noted that after pattern completions, it is common to get corrections before bouncing off supports to resume the upside. And I noted that the immediate targets are at the resistances at 1.0981, 111.41, as well as 112.77. We have had 2 weeks worth of corrections before seeing the bounce of the 20-day moving average as well as of the cloud and as well as the symmetrical triangle trend line support last week, and this week we have reached the first I would say the immediate target at 109.81. Further upside, which means if there is weekly closings above 109.81, that would lead euro dollar higher to 111.41 and further higher to 112.77, so staying bullish on the euro dollar. In the last video on the 21st of July, I said that sterling dollar falling is fine because breakouts are often, though not always, accompanied by corrections to around the point of breakout. So this decline, I would call it a corrective decline, and it's part of the bullish progression. We have seen this happen. Sterling dollar could bounce off the 20-week simple moving average or off the cloud support to resume its bullish outlook as suggested by the bullish symmetrical triangle. Now, the textbook target that I've noted back in the last few videos was at 139.61, which I said to be excessively high. The immediate targets should be around the immediate resistances 128.65, 130, the psychological resistance, as well as 131.45. We have reached 2 of those 3 immediate resistances, and weekly closings above this 128 plus 130 would lead sterling dollar higher to 131.45, and then I will update on what the next resistances are. Staying bullish on the sterling dollar. The situation for the Aussie dollar is a bit more tricky. In the last video on the 21st of July, I noted that declines are corrections and I said that they are common after pattern completions. Aussie dollar declined more than expected, which is why I said it's tricky. It appears to have bounced off the lower support trend line over here. This is a weekly chart, so this week Aussie dollar fell to a low of 0.6350, but we have yet to have a weekly close in this case, which is supposedly on Friday, 10th of August. We have yet to have a close below this support trend line, so this bullish symmetrical triangle remains valid. I will maintain a bullish outlook on the Aussie dollar at this juncture. I suspect this downside exhaustion candle is the start of a bounce higher for the Aussie dollar, so I think I will maintain a bullish outlook over here. The textbook target is pretty high over here at 0.7616, and I said that we should not expect an immediate advance for the Aussie dollar towards this textbook target. The immediate targets are at the resistances 68.72, 0.7 the psychological resistance, as well as 0.7155. We now move on to the Kiwi dollar. Kiwi dollar is a special case, currently trading at 0.6004 on the 8th of August. There was a weekly breakdown below the support trend line over here. This gave the impression that this symmetrical triangle was completed in a bearish direction, but the immediate rebound over here last week that goes back into the triangle tells me that we need to be skeptical of this breakdown. I believe this is likely a false break, and I don't think the Kiwi dollar has completed this symmetrical triangle just yet. A clear breakdown below the support trend line, which is a breakdown followed by continued trading below the support trend line, will give us the bearish confirmation. Until then, I'm skeptical about Kiwi dollar's bearish intent, and I think that this bounce over here that formed a downside exhaustion should lead the Kiwi dollar higher going forward. I last updated about the EURUSD in the video on the 22nd of June, and since then it rallied in an attempt to invalidate the head and shoulders top. I don't think the head and shoulders top was invalidated actually. A decline back below the cloud will give EURUSD more downside bias, and a weekly close below the neckline at 10.99 will still complete this bearish pattern that has a textbook target at 10. In the last video on the 21st of July, I said that a breakdown below the cloud will add to dollar yen's downside strength, and that the textbook target of the rising wedge, a bearish pattern, is at 149.5. Dollar yen has since surpassed this target. I will now cease coverage of dollar yen until there is formation of a new chart pattern and consider this rising wedge to be resolved. With dollar yen falling sharply, it is no surprise that all other yen crosses would also have fallen sharply as well. And there are rare times when a chart pattern works so well that all supports become ineffective. Sterling yen is one such case. The rising wedge had a textbook target at 195.54, and while I was bearish on this cross, I certainly did not expect sterling yen to tumble immediately to bypass all the supports that I've mentioned in the last video on the 21st of July. I will now cease coverage on sterling yen until there is formation of a new chart pattern. Swiss yen had a minor correction over here after completing its rising wedge, and after that just tumbled thereafter to reach its textbook target at 170.71. This chart pattern is now resolved, and I will now cease coverage on Swiss yen until there is formation of a new chart pattern. Euro yen completed its rising wedge 2 weeks ago, and a bearish outlook is confirmed. The textbook target is at 157.7 and was reached this week. Seeing how Euro yen is forming a downside exhaustion candlestick this week and could bounce off the Ichimoku cloud support, I suspect the next move is higher from here as a form of correction. I will now cease coverage on the Euro yen until there is formation of a new chart pattern. In the last video on the 21st of July, I noted that Euro sterling may have bounced off the wedge support over here, and the next move is expected to be higher to test the wedge resistance. Euro sterling completed its falling wedge and has since reached its textbook target at 0.8574 on the 5th of August. I will now cease coverage on Euro sterling until there is formation of a new chart pattern. We're done with FX, and now we move on to equities. First up, Richemont has finally completed its double top on the 5th of August via a close below the 125.45 net line. There is now bearish confirmation, and the textbook target is at 100.45. Do note that there are supports at 114.8 as well as 104.10 that could bounce Richemont higher and prevent the textbook target from being reached. In the video on the 14th of July, I said that the second shoulder of the head and shoulders top has been formed and Deutsche Bank should get further downside. Deutsche Bank has since completed the bearish pattern on the 1st of August and fell rather quickly towards the textbook target at 11.7. After the sharp recent decline, I expect a rebound first before resuming the downside. As said earlier, corrections are common after pattern completions and could go back to the point of breakdown before resuming the downside. I suggested a potential double bottom in Prudential in a video on the 30th of June, but this is no longer valid. Prudential has since invalidated this bullish potential by falling much lower below the $680 mark. I will now cease coverage on Prudential until there is formation of a new chart pattern. Danaher had the correction that I said in the last video dated 21st of July, but extended that rebound to invalidate this bearish pattern. The double top is now no longer valid, and I will cease coverage on this name until there is formation of a new chart pattern. Given the big gap up over here, I expect Danaher to decline going forward to fill this gap. Rolls-Royce completed a rising wedge, a bearish pattern on the 25th of June. Over here, it looks as though Rolls-Royce will never be able to reach its textbook target of 414.2 after falling to a low of 423.4 and rebounding. But on the 9th of August, Rolls-Royce fell to a low of 407, thereby reaching its textbook target, but then rallied sharply to hold above the Ichimoku cloud, sustaining its upside bias. I consider this bearish pattern, the rising wedge, to be resolved after reaching this textbook target, but still Rolls-Royce has turned bullish after sustaining above the Ichimoku cloud. I will be ceasing coverage on the Rolls-Royce and will only update once it has formed new chart pattern. Next, we moved on to Infineon Technologies. It unexpectedly tumbled 3 weeks ago to close below the Ichimoku cloud. Downside bias has prevailed, and this eventually led Infineon Technologies lower. It has since completed the symmetrical triangle in a bearish direction 2 weeks ago. So there is now bearish confirmation. The textbook target is at 9.1, which to me seems excessively low. There are supports at 14.03 as well as the 22 level that could prevent Infineon Technologies from tumbling that far. In the last video on Netflix, I said that it was rejected by 961.72 and it should be headed lower, and once there is a breakdown below the wedge support, Netflix will be turning bearish. Netflix had a bearish confirmation 2 weeks ago, and now Netflix is in a bearish outlook. The textbook target is 437.52. There is a support at 549.64 that can prevent Netflix from going much lower. Next, we moved on to Wells Fargo. In the video on the 21st of July, I expected Wells Fargo to extend its decline to form a second shoulder. This has happened, and Wells Fargo has also completed the head and shoulders top via a breakdown below the neckline at 55.6. And within 2 days, Wells Fargo fell to a low of 50.15, just short of the textbook target of 49.34. This constitutes around 87% of the expected move. While Wells Fargo is still bearish due to the completion of this head and shoulders top, I expect the next move for Wells Fargo to be higher first before resuming the downside. This is because I expect the gap down. Let me show you where. There is a gap down on the 2nd of August that I expect Wells Fargo to first fill before falling thereafter. Secondly, as I've said before, pattern completions are often, though not always, followed by corrections. So these two reasons are why I think Wells Fargo will first be headed higher first before moving lower towards the textbook target of 49.34. Next, we moved on to Bristol-Myers. This is another example of the rare type of chart pattern completions that did not have any meaningful correction. Now, after completing the falling wedge on the 17th of July, Bristol-Myers rallied to surpass its textbook target at 46.03. I will now cease coverage on Bristol-Myers until there is formation of a new chart pattern. Freeport-McMoran is also another example of pattern completions that did not have any meaningful corrections. The pattern completion was done on the 18th of July. Head and Shoulders top had a textbook target of 38.97. After completion, Freeport-McMoran just broke through the supports at 44.43 as well as 43.32, and we reached a low on the 5th of August at 39.08. I deemed this chart pattern to be resolved, and I will now cease coverage on Freeport-McMoran until there is formation of a new chart pattern. The last coverage for this video is on Dell Technologies. The rebound that I expected for Dell Technologies in a video on the 21st of July was very shallow and failed to fill the gap before resuming its downside. It is nearing the textbook target of 82.9 after breaking down the two supports at 114.57 as well as 105.16. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video it will highly likely be on new crosses and names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.